everyone. In this video, I'm going to highlight two red flags for PayPal stock and PayPal stock investors. But before I continue, let me also highlight the fact that I have PayPal stock rated as one of my top stocks to buy right now. But even though PayPal is on my list of top stocks to buy, I still consider the bear case, the bear argument, the risks, everything going against PayPal so that I can understand the risks involved in making this investment, right? I don't ignore risks when making an investment. I don't try to sugarcoat them. I accept, acknowledge them, and then judge whether or not the risk versus reward is meaningful enough to purchase or recommend the stock as a buy. So that's what I'm doing in this video. I'm highlighting the risks, the red flags associated with PayPal stock right now. And these are just two of them. There are plenty more. I assure you there are plenty more. These are just two. If you want more, I'll link to some more videos at the end of this one. I've got a whole playlist on PayPal stock. You could dig through everything and really do your due diligence there. So the first red flag is their business loan portfolio. Management is saying here on August 2nd, their latest conference call, they're saying they've seen some deterioration in their business loan portfolio. But this portfolio represents less than 15% of their net credit receivables. And what they mean by deterioration is the quality of those loans have dropped. By quality, I mean repayment. They've seen more people not paying back or paying late or missing a payment, and that really drops the quality, that drops the value, because if you've got a $100 million loan portfolio, but more and more people are not paying back, is that portfolio really worth $100 million anymore? If you don't expect to receive 10 million from there, 15, 20, 30, as that number rises, the value of that portfolio really falls. And so the way PayPal says they're reacting to this is by tightening originations. They're not making as many new loans, and they've already seen improvement in the new loans that they're making. Those have better performance. So that's what they're dealing with. I would, I've said this very often, I'd prefer PayPal not be in the loan making business. I don't think that's the core of PayPal's business, and I wasn't a fan of it when it's going in. I'm tolerating it just because I think it's an incremental service that they're adding on there, but I'd prefer they focus on the core. Nevertheless, here they are. Maybe when the new CEO comes in, and there is another red flag about PayPal. I won't go too deep in there, but they're searching for a new CEO. So maybe when the new CEO comes in, that might change. Maybe PayPal no longer in making loans. I would be a fan of that decision. The second red flag is that expenses, transaction-related expenses, are increasing for PayPal. That's the core of the business, and that's in trouble, at least on the expense side, right? So volume-based expenses increased by 13% in the second quarter of 2023, and that was on top of a 30% increase in the second quarter of 2022. So they saw a 30% increase last year and another 13% increase there. I would have liked it if they would have elaborated on what's going on there. Why are these expenses increasing so much? But they leave it at that, and they inform us that transaction margin was 45.9%, which was down considerably from the previous year. And they do tell us that while the transaction margin declined in the quarter, the rate of decline slowed considerably both from the first quarter and the second quarter last year, and we're executing on our strategy to grow transaction margin dollars. Now, even as a person who recommends PayPal stock as a buy, I find this explanation troubling for several reasons. Number one, there isn't enough transparency. Number two, they're trying to sugarcoat things and not really telling us what's going on or elaborating on what's going on. And then number three, they're changing the terms here. Notice they go from transaction margin to transaction dollars. Transaction margin is a percentage, transaction dollars is an amount. You can continue growing the amount, but if your margin keeps falling, that's still troublesome for the business. That means the business is less profitable structurally. Something is going on there that's causing the profit margin to fall. And so you're going to need more top line growth in order to generate this transaction margin dollar growth, because percentage wise, each new dollar in revenue is bringing in less in transaction margin dollars. So you're going to need more of the revenue to increase these transaction margin dollars. Whereas if you can expand on the transaction margin, that would increase the transaction margin dollars without necessarily needing an increase in revenue. So this isn't the direction that investors want to see PayPal go in, especially since it's a mature business growing and you're looking for economies of scale here. You're not looking to go backwards. So that's why it's a red flag. And for me, this is a big red flag in PayPal stock and for all PayPal stock investors. All right, but that's all I've got for this video. Just highlighting two red flags for PayPal stock and for PayPal stock investors. But remember, I still have PayPal stock rated as a buy, and I still have it rated as one of my top stocks to buy, because I think these red flags, I think these risks are already reflected in the stock price that's down almost 80% off its high. So for that reason, I think the risk versus reward is meaningfully in favor of PayPal. But that's it for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.